The war has been paused, but what does that actually mean for the real estate market in Dubai? That's exactly what we are going to look at right now. Because while many people are only watching the latest news, the first changes are already happening in the background. Decisions are being delayed, offers are being reconsidered, and the market is starting to react differently than before. The key question is this just a short pause in the momentum, or is it something more fundamental shifting right now? And the most importantly, how should you as an investor deal with this if the rules of the game are possibly being rewritten? That's exactly what today is about. Welcome, my name is Eugene Zimbelman from Dubai Finance. I help investors successfully invest in real estate in Dubai by finding the right property as an investor, Dubai Land Department certified property valuer, and mortgage specialist. I'm recording this episode on April the 20th, one day before the ceasefire expires. It doesn't get more current than this. So let's look at what this moment truly means for the geopolitical situation, for the market, and most importantly, for you as an investor. Many people ask me right now, Eugene, what is actually going on? I will give you a quick, honest overview without headline noise, just the facts that really matters. April 8th, Pakistan brokers a 2-week ceasefire between the US and Iran. Part of the deal, Iran is supposed to open the Strait of Hormuz. Markets cheer briefly, oil drops, sounds good. Wait for it. April 9th, just one day later, the Strait of Hormuz is still effectively closed. Iran controls who gets through. At the same time, Israel continues to strike Lebanon. Iran considers the ceasefire already broken. 230 loaded oil tankers are stuck in the Gulf. April 11th and 12th, Islamabad. Historic, it has to be said. The first direct talks between the US and Iran since 1979. J.D. Vance, Witkoff and Kushner on one side, Iran's foreign minister and parliamentary speaker on the other. 21 hours of negotiations, no deal. Vance says, Iran did not accept our terms. Iran says, the US kept moving the goalposts. Both sides go home. April 13, Trump imposes a full naval blockage on all Iranian ports. The IRGC response, any approach by warships would be a ceasefire violation with severe consequences. April 17, a brief moment of relief. Iran declares the Strait of Hormuz fully open, in parallel with the Israel-Lebanon ceasefire agreement. Oil immediately drops 11%. Stock markets rise. Everyone breathes. And then Trump says, great, but the blockage stays in place until a full deal is reached. April 18th, the day before yesterday, Iran reverses course again. Hormuz stays closed as long as the US blockage continues. Indian tankers are fired upon by Iranian speedboats and forced to turn back. And today, April 20th, the day I'm recording this episode, the ceasefire expires tomorrow on April 21st, the day you are watching this episode. The Strait of Hormuz is closed. Just last night, the US attacked an Iranian cargo ship in the Strait of Hormuz that ignored warnings and orders to stop from an American warship. After repeated warnings, the US fired on the engine room and seized the vessel. At the same time, a second round of negotiations is being discussed. The US has signaled they are ready to meet again. Iran has not yet. Pakistan is actively traveling through the region. Saudi Arabia, Qatar, Turkey, Iran, trying to enable new talks. Trump says publicly, maybe I won't extend the ceasefire. Then there will be blockages and unfortunately bombs again. This is not peace. This is a pause with an expiry date by tomorrow. Already broken multiple times with no agreement in sight. And did you know that the Strait of Hormuz carries around 20 million barrels of oil per day, 1/5 of the world's seaborne oil trade? This single waterway, just 34 kilometers wide at its narrowest point, is currently holding global energy markets on edge. And as long as it stays closed, the clock is ticking for everyone doing business in the Middle East, including Dubai. So now you know what is happening geopolitically. But what does this actually do to the real estate market in Dubai? And this is where it gets interesting, because the answer is completely different from what most people currently believe. And something many people ask me is, has Dubai just crashed? Some are saying the Dubai real estate market has fallen by 30%. On social media, there are voices saying prices must fall even further, 50% or more. But is that true? And what does it actually mean? Let's look at that right now. And I promise you, the reality behind these numbers will surprise you. Many people don't know that there is a critical difference here. One that most news reports completely ignore. The Dubai Real Estate Index has indeed fallen by up to 30%. That is real. But this index does not track property prices. It tracks the shares of developers like Emaar and Dijar, and not physically properties directly. The actual physical property prices in Dubai, they have fallen 4 to 7% from their peak. Not 30%, 4 to 7. That is the difference between panic and reality. Some areas have not been affected at all because many sellers are simply waiting. Not everyone falls into irrational panic and sells at the fastest price they can get. And now, here is something that surprised even me. Despite the war, despite missile attacks, airspace closure and the Hormuz blockage, Dubai recorded a transaction volume of 176.7 billion dirhams in the first quarter of 2026. That is 23% more than in the same quarter of the previous year. And this is despite the entire month of March being overshadowed by the war and the conflict. The market has not disappeared. It has paused. And that is a fundamental difference. And what I observe every day and what the major media don't report is that the market is currently behaving in a very mixed way. Not everyone is reacting the same. On the buyer side, a classic wait-and-see mode has set in. Investors are watching, holding their capital ready. But some are also taking advantage of opportunities. Many of our investors have been able to buy really attractive properties in the last 2 weeks. For the overall market though, a build-up of demand is forming. Capital that is waiting for a trigger. And what's interesting? Property viewings have increased by around 70% in just the last few days. People are already looking again. On the seller side, the picture looks like this. The largest developers like Emaar are holding their asking prices. No direct discounts from developers. That is a clear sign of confidence. Other developers are offering more flexible payment plans, and in some cases, there are also discounts on off-plan properties from developer directly. Dedicated episode on exactly this topic is coming later this week. So subscribe to my YouTube channel, Dubai Finance Now, so you don't miss it out. And something many investors ask me is, Eugene, is Dubai still the same investment it was before this conflict? And my answer is no, it's better. Let me explain that. Not with marketing messages, but with data and historical patterns. Many people don't know that Dubai has used every single regional crisis of the last 20 years to reposition itself. The Arab Spring in 2011 brought capital from Egypt, Libya, and Syria. The war in Ukraine in 2022 triggered a luxury boom. Capital from Eastern Europe and Russia flowed massively into the market. And after the Iran conflict, Iran is devastated. Lebanon is shaken. Confidence in other Gulf destinations is weakened. Once again, Dubai will stand as the only fully functioning metropolis in the entire region. And that is exactly what attracts capital. And that is not a coincidence. That is the structure. According to international rating agency, the UAE holds government liquidity reserves of around 210% of the GDP, meaning the government has more than twice as much capital in reserves as the entire country produces economically in a full year. That is one of the strongest government balance sheets positions in the whole world. Over 75% of the UAE economy comes from non-oil sectors. Dubai is essentially no longer depending on oil at all. Their dependency on energy prices has long been broken. During the entire conflict, Dubai processed 3,570 real estate transactions worth almost 12 billion dirhams in the very first week of the war alone. Even when the stock exchanges briefly suspended trading and tourism dropped by over 60%, the property transaction market kept running. That is strength. And now comes the view that I consider the strongest, one that goes far beyond this conflict. Look at what is happening in many parts of the world right now. Multiple economies are dealing with recession, weak political leadership, rising tax burdens, and real estate yields that sit at 2 to 4%, if that. More and more wealthy individuals and business owners are drawing the same conclusion. They are spreading their capital internationally, and they are looking for a location that gives them what many countries right now cannot deliver: legal certainty, stability, simple taxation, and growth, but also security. And the Iran conflict has actually proven that. I know it sounds unexpected, but just imagine if a major city elsewhere in the world were hit by over 2,500 air attacks. What would that damage look like? In the UAE, life continued normally. Today, schools in Dubai are reopening. They had earlier holidays and remote learning in recent weeks for safety reasons. My 2 children were really looking forward to going back to school this morning. Life is returning to normal. That trust and that sense of security, Dubai delivers exactly that. On top of that, rental yields of 6 to 7%, 2 to 3 times more than in many other markets. The dirham is fixed to the US dollar, which means everyone investing in Dubai today is also protecting themselves against further currency depreciation in their home country. This is no longer just a strategy for the ultra-wealthy. It is smart spreading of assets, and more people around the world are realizing that. And the numbers confirming it. In the first half of 2025, according to the CBRE, the world's largest real estate analytics firm, over 62 billion US dollars of foreign capital flowed into the Dubai real estate market. Around 176,000 people moved to Dubai in 2025, and the trend is rising. The World Bank has raised their GDP growth forecast for the UAE to 4.1% for 2025. A diverse economy, one of the strongest government balance sheets in the world. No other country comes close to these numbers. And what this conflict has changed long term is not Dubai's appeal. And it is exactly this awareness that has driven capital throughout Dubai for the long term. The conflict is a bump. The trend is structural and lasting. But knowing all of this is not enough on its own. The difference between a strong and a weak investment is not made by market conditions. It is made by choosing the right property at the right time with the right structure. I have been an active and real estate investor in Dubai for years. I buy in this market myself. I know the Dubai real estate market very well. As a Dubai Land Department certified property valuer, I know exactly which property is worth its price and which is not. That is exactly what I bring to the table for my clients. And if you want to get specific and take advantage of the opportunities available right now, if you want to know which properties in Dubai currently have the strongest risk-reward profile, what a mortgage structure could look like for you, And whether this is the right moment for your situation, then go now to www.dubai-finance.com and book a free first initial call.